Good afternoon. Thank you, NAILBA, for joining us today. We really appreciate you taking the time to join us. We're thrilled to be part of this panel, and I've got some incredible guests that are the highlight of this show. So thank you for joining us to talk a little bit about current state of the industry. We hear the word cross-sell thrown around a lot between life insurance and annuity, and I have three of the best in our industry to talk to us today. And I know you'll feel the same way after hearing them chat a little bit. And we're going to talk through our panel. But before we go through that, I want to make sure I introduce the stars of this show. First, we have Eric Taylor, who is Senior Vice President of Annuity at AIG. We have Jim Bowman, who is President of Life at Advisors Excel, and Jason Lee, who is CEO of Broker Service Marketing Group. So thank you, gentlemen, for joining us today. Going to have a great opportunity to hear your feedback and your opinion, and I promise we won't hold it against you, no matter what that opinion is. But without further ado, we're going to jump right in. So as we think about 2020, and I know everybody who's watching this is going, oh gosh, not another discussion about 2020 and COVID. If you say those words again, I want out. But there's, I think, a lot of things we learned from 2020 and a lot of things we can take with us, not only from a carrier and a product manufacturer standpoint, but most importantly, from our great team of BGA partners out there that are doing all of the hard work and the heavy lifting, working directly with producers to train and educate, which is, heck, the toughest job out there is being a producer and sitting one-on-one with a client and being able to do that type of financial planning to help those clients meet their goals. So if we take a look back at 2020, given COVID, given social distancing, given a really tough interest rate environment and market volatility, it created some certainly turmoil from a retirement growth and meeting clients' income needs, given the tough environment from an index perspective. So how do we continue to meet those consumer needs given this environment? So I'm going to actually kick it off with Eric Taylor, again, Senior VP at AIG, to hear from a manufacturing perspective how product development and product manufacturing is meeting those needs given this tough interest rate and market environment.
Thanks, Laura. Thank you very much for having us. I really appreciate it. I'll just make one quick note to start as we record this panel. AIG is in its quiet period prior to releasing fourth quarter earnings, so I won't be making any comments relative to specific current or future company performance. But generally, I'd say on this topic, regardless of the pandemic or the interest rate environment, client needs and demographics haven't changed, and people are still marching toward retirement inexorably. So it's something that, regardless of the environment we face, we've got to rise to that challenge. And we find that with respect to the interest rate environment, just to start, I'd say it's tough all over. And by that I mean that when you're looking for principal protected options, annuities and life insurance can provide tremendous value as an alternative and an alternative accumulation option relative to the other alternatives that are out there without the same level of market risk. So, there's value to be had here in any planning environment from the standpoint of, regardless of whether we're in a tremendously low interest rate environment or not, some of the dynamics of these products that we offer can really be of value to help protect against these risks. And I also say, so some of the common rules of thumb that we have been working with in the industry for many years, like the 4% rule, have really been challenged. So the industry is very well positioned to provide protected lifetime income, for example, where a do-it-yourself type of methodology or mentality becomes much riskier relative to what people have been used to in other environments. So in fact, I would say some would argue that insurance solutions have never been as well positioned when compared to that do-it-yourself alternative, given the current environment of low rates and above average volatility.
Thank you, Eric. And From a slightly different perspective, what I'm thrilled to have both Jim and Jason joining us. And prior to this panel, I had asked them, how would you describe your role as a BGA and what you do? And it was funny to hear from both Jim and Jason. Jim had said, we are a traditional annuity agency that also does life. And to hear it from Jason's perspective, he goes, we're a traditional life insurance agency that also does annuity. They're both selling themselves short. So I'll say that. But to hear it from the perspective of two different organizations that might have originally started with different focus product lines, but do both incredibly well. So Jim, I'll kick off with you. If you could tell me a little bit about how this is impacting yourself and Advisors Excel.
So what we've been trying to do is get our advisors to see, kind of the whole field, if you will, when they're sitting down with the consumer. What are their goals and aspirations? It is not just about life insurance or annuities, it's problem solving. And Eric referred to it, it's like, what are the client's needs? And our advisors focus on the over 55 marketplace, people who are looking to retire or who already have retired. And so we want to take an approach that's more holistic and even include the advisors who are securities or RIAs. So we want to look at where does insurance products, risk mitigation, accumulation, tax advantages, and efficiencies come into place along with the marketplace and what's going on in the investment world. So we want to take a big picture approach to this and try to find how we can use all three asset classes, if you break it down that simplistically, to the consumer's advantage as they're looking to maximize their retirement.
Thank you, Jim. And Jason, how would you say from your perspective?
Yeah, I like the way Jim put that. I think that relevancy is our greatest challenge with advisors, whether it's as an RIA context or a broker dealer context. So we spend a lot of our time talking about the risk management strategy that each advisor has and each institution that we work with has, and really trying to understand how to bring not only the products, but just the client conversations to bear more frequently. I think a lot of the challenges of last year have certainly increased the relevancy of risk management as a category between advisors and clients, but we've really got to lean into that now. We can't, expect that the environment is going to stay this way forever. But clearly today, more so than a year ago, clients and advisors are more aware of the risks that we all collectively face. And I think that represents a tremendous opportunity for us as an industry to again, lean into that, help advisors have these conversations with their clients, whether it's a tax efficiency play, as Jim pointed out, or just a broad risk management play.
Well, Jason, you bring up a really good point, because I think we've all had a heightened awareness of our own mortality. You recognize that when you go to the grocery store and you have to wear a mask. I guess depending upon your state right now. But everyone is sitting in the same environment where the need hasn't changed, but the environment has from perhaps a market or an interest rate perspective. So maybe Eric, I'll flip it back on to you. How is carriers, and certainly Sagicor, AIG, and all of our great carrier friends out there, how do we react to that?
Yeah, I would certainly agree with Jason that many clients are much more, attuned and aware of the need for planning with respect to their own financial situation. And we and other carriers have been working on tools that support that planning and education process. So financial professionals and agents can follow a repeatable process for how to discover those needs and present better solutions more holistically. With respect to product development, I think the industry has responded well with new innovation. I'll say volatility controlled indices, for instance, and new product designs that deliver new value propositions. This certainly isn't the first time that the industry has seen hurdles and challenges to the quick changes in the environment. And so I think that they've done a really good job with that, and will continue to do so. We and several carriers have endeavored to create education tracks as well that assist in the planning process to see how, the various benefits of annuities and life insurance can fill holes in clients' plans. These different life stages, life events that happen create different opportunities to discuss accumulation and income planning and tax planning, legacy planning, and each of our life and annuity solutions can help play a role in that planning process. So we really believe that education and transparency are very important parts of the planning process to help agents and their clients understand how these solutions help and how they perform in various environments.
Thank you, Eric. And yeah, it's an interesting role that we as carriers then now put in the hands of our BGA partners and our producers, because as carriers, we're developing products and amending and changing product portfolios and all of the great tools that we provide to our BGAs and producers to help meet those clients' needs. Then we put in the hands of Jim and Jason, our great BGA friends. All right, we've given you these tools, now educate. And so maybe Jason, if you want to kick off this one, so now that us as carriers, we provide you with the tools, how do you take those tools and those products and use those as an education and an awareness then with the producers with whom you work?
Sure. Yeah, I mean, I think, products are certainly experiencing a lot of change right now, and I think we can count on seeing, more of that based on what I'm hearing on both sides, on the life and annuity side for 2021. But I also think, back to what we were saying a few moments ago, what an opportunity for us in our history as an industry to bring these products to bear and really help advisors and clients more effectively manage risk. Whether it's leveraging the tax benefits of cash value of life insurance or the death benefit of life insurance, or on the annuity side, you look at where the markets are at right now. I mean, the crash we experienced in March is a distant memory, and there may be another dip here, but we are at an all-time high for market values. And for folks that are approaching retirement, we think it's a tremendous opportunity for them to talk to their advisors about taking some chips off the table, creating some principal protection and retirement income guarantees for those that's a viable strategy. The time is now. The time is actually really good. Product pricing in general and the need to have competitive products, my thought on that is everything's relative. With fixed annuity rates and internal rates of return on cash value and death benefit, those are as competitive, relatively speaking, as they've ever been for both fixed and indexed life insurance, fixed and indexed annuities. So I'm really bullish on 2021 and what we could potentially accomplish as an industry, or even as challenged as products are today, relatively speaking to the past. You got to look at the context that we're in. And I think, relatively speaking to the alternatives around today, the timing is really good for us. And we just need to keep encouraging advisors to have those client conversations.
Now, Jim, how are you handling these wonderful tools and products that we're providing to you?
Well, along those lines, I think Jason kind of nailed it. I mean, there's no better opportunity to serve our advisors and them their clients than today. There's more creativity in product development than ever. I mean, and some people may not like some of that creativity. If you want to talk the multipliers and all these new vol indexes and everything else that can make your head spin, but you got to understand it. There's some great opportunities, even all the way if you want to go into the variable world. All these products have a place. It's really up to us to educate, first to understand it and where does it fit with our distribution, number one. And then how do we help advisors understand how to put them to work? Whether it's even, go in the creativity in the long-term care marketplace. We've seen a lot of evolution there. So we love the challenge, and our job is really kind of understand it, make sure our advisors can digest it and present it to their clients. And then when we get a chance to work with the Erics of the world to say, hey, here's what we're hearing. These would be some great features. Same with you, Laura. Hey, here's what we think Sagicor could bring to the table that could earn you some market share. So we feel that's part of our role as well.
Well, and Jim, you bring up a really good point. You mentioned AG 49A, and if those of you who saw the Christmas miracle of 7702 update, so you can't have product development without regulation. And insurance carriers and certainly BGAs and advisors, we have to be acutely aware and manage our products and our portfolios around that regulation. So in addition to the 7702 updates, certainly there was a tremendous amount of noise around AG 49A. Now, Jim, tell me from your perspective, that AG 49A created some simplicity and some more regularity around illustrations, taking away the ability to illustrate multipliers or non-guaranteed bonuses, but it also created a lot of noise. So from your perspective, was it just noise?
Well, it depends on, there's different advisors that present differently to their consumers. And for the ones who relied on illustrations, it's a lot more than noise. For the other ones who wanted to talk about concept and efficiencies and everything, it was just noise. So it really, to me, falls in which camp the advisor is in. And there's no right or wrong camp. It's just how they were trained, how they feel comfortable. I think Jason said something that's really important on this. He said it previously, and it's really relative to what else is available. How do you want to position this asset class versus other options that the consumer should consider? And if we're talking about, tax deferral and borrowing your own money for supplemental retirement, what are your other options and how does this compare? That really should be the foundation of a consumer decides. And whether it's AG 49A that kind of, okay, that may limit something, it's just a guideline. And it's really the concept and what's transparent to the consumer on what their options are. And we're a big believer that, permanent life insurance, whether it's IUL, VUL, whole life, really should be part of a consumer's portfolio, but should only be a part of. It does not take away from the value of what annuities bring and can bring on a guaranteed basis or tax deferral basis, or the value of being in the marketplace. So it's compared to what is really how we want our advisors presenting it to their consumers.
And Jason, I'd love to thank you, Jim. And Jason, love to hear from your perspective. How did AG 49A impact your business?
Yeah, well, I think, the notion here is, I think, to try to create some level of uniformity and increased simplicity amongst the IUL product set. My opinion on it is that the most important thing is exactly what Jim said. You had earlier on, kind of echoed what he said about me. It's like a love fest on this call right now, Jim.
It's great.
But people have to understand it. I mean, that's the standard in my mind, is that the manufacturer, the seller, and the buyer all need to understand what is being transacted. And as long as that's the case, I think we do need to believe that as an industry, we're going to put products out there that have significant consumer value. I think where the industry can get itself into trouble is when all three parties don't understand what is being transacted. And that's something we do need to be careful of as an industry in our world, distribution, Jim and I's world, that we do educate the advisors who then in turn educate the consumers about what they're buying. And on Eric's side and your side, on the manufacturer, putting products out there that can be understood is highly relevant to our long-term success as an industry.
Laura, may I add one thing on this? When we approach an advisor about, the options they have, what we're trying to get also them to understand is, the permanent marketplace is not a commodity the way GUL and term is. And what we really want them to do is identify their philosophy that they've built within their own organization and how they want to portray that to the consumer, to the manufacturer. So then they can have a consistent story and message. And one may be very, love the multiplier story and think that's awesome because there's upside there and they understand there's a cost, there's a risk reward. And others may like the, zero's your hero story if you're talking IUL. It's really getting the advisor to understand, what they're positioning and why to their client, and then who's behind it so they can know the ins and outs of that product.
Thank you. And Eric, I will say as a fellow carrier and competitor friend, AIG has built a very strong portfolio of products that do include transparency, and really around not only on your IUL but also on your annuities. If maybe you could share a little bit of your philosophy around this.
Yeah, sure. I'd be happy to. AG 49A was built to de-risk IUL illustrations, I suppose what you could say. But our philosophy has always been that we want to provide products that are transparent, low cost. We've never offered multipliers on IUL, instead have opted for kind of a simpler, low cost design. We believe, though, that we'll continue to see IUL products evolve, from both directions. Here at AIG, we refreshed our IUL products in December to ensure they continue to provide strong value. These tweaks for us were relatively minor, and so our products look quite similar. But our focus has always been on that kind of low-cost, transparent side of things to help ensure that it's easy to understand and explain, and that they're designed to perform well in various market conditions. So, I think things like new ways to combat market volatility, offer growth potential through proprietary or volatility controlled indices will continue to happen. We offer several in our products to provide more stable returns in volatile environments. But I also think creative sales tools and marketing are going to be more important than ever as companies try to find ways to provide value beyond purely the illustration and more along the sales track that we talked about earlier. So we and others are, I think, trying to provide good unbiased education to our partners and help people understand product differences. I think that understanding, to Jason's point, is very important. And of course, in many ways, the best product will be the one that you can understand, right? It's the one that how it will work for you throughout your planning process.
So I think if we sum up what we've talked about so far, there's a universal theme of, despite so much noise in 2020, whether it's changes in regulation or COVID or social distancing or market turbulence, as Jason mentioned, you hit the bottom in March, and now that's almost a distant memory that we're sitting at the high. And ultimately, all the consumer need hasn't changed. The consumer want for their financial planning goals has not changed, whether it's guarantees, it's liquidity, it's accumulation. All of those needs still exist. But maybe kind of as we wrap up our discussion today, the other thing that we mentioned, in addition to meeting those client needs, was also changing regulation. And how do we, as different parts of the same industry, either on the manufacturing or distribution side, change our practice to make sure that we're meeting the consumer need, but also meeting the regulatory need. So a lot of that comes down to best interest, and then also, some potential pending reintroduction of the DOL regulation. So maybe, Eric, I'll start off with you. How do you think an advisor should be taking a look at their practice to not only meet that client need, but make sure that we address our ever-changing need for regulation and best interest?
Right. Thank you. Well, as we discussed today, sitting here, more than a dozen states have adopted or are expected to adopt soon the new Annuity NAIC Model Act, implementing a best interest standard. And most producers follow most of the key tenets proposed with these new regulations today. If there's, I guess, one area that I think they should continue to focus on improving, It's the documentation of their sales process and planning discussions had with clients that resulted in their recommendation. So a well-documented case provides a very strong foundation for ensuring compliance with the regulations. You get credit for what you have written down, not just what you recall.
Yes.
And so we're focused on trying to, clearly communicate these new regulations, ensure that we're doing our part to, provide, the clarity relative to what's been asked. We, would like to be thought of as a thought leader out there in the industry, providing training, guidance to help producers compete. And we're working on new tools like short videos, which help producers accelerate their learning as well. So, following these regs should help agents' credibility and referability, and the disclosure that's provided should strengthen, an agent's value proposition as well. So, if they're kind of in line with that, I think they're in a good spot. But generally speaking, most agents already hold a core value proposition to ensure that client needs are well served. And so likewise, there will be new training that's out there required by the states that ratify these new regulations. So taking that training early, utilizing additional tools that are offered by vendors, carriers, and our distribution partners that help stay organized, I think would be key. So if I sum up, there's going to be new technology that can be used, but educate your clients and document your conversations and discussions.
So Jim and Jason, we most likely have some folks joining us today that are RIAs, that are financial advisors, potentially traditional insurance agents. How would you suggest that they implement into their practice the changing best interest?
I'll jump first, Jason, because what you say is probably what I'm going to say anyway. So, but I think Eric nailed it. It's documentation. It is having a true process where you learn about the client, you figure out where they want to go, what their goals, ambitions are, and you document it all along the way. And then when it comes to sales suitability, where it goes to the insurance carrier or the financial institution, you've got a game plan down, and you're showing the why, because you've learned the why from the consumer. So I think it's and I think since last time DOL was kind of on the docket, I think a lot of advisors have learned from that and expected it to be here anyways. So I really think it's all about a really good process that you take through your clients through, document it, make sure they have it as well. And I think you are going to be pretty well served when it comes to the best interest rules.
Yeah, I think just kind of going back to what we were talking about earlier around the opportunity to educate advisors, that there's never been more assets held in retirement accounts than now, whether that's defined contribution, defined benefit, IRA. The market's at its all-time high, and I think a lot of advisors out there, after the shock of the 2019 crash, they kind of parted ways with annuities, and most of that was on the variable side. We've seen incredible growth on the index and fixed side over the last 11 years, and I just think it's up to us to get back in front of these advisors and really encourage them to consider what their clients' options are for principal protection and guaranteed income. On the life side, the relevancy of life insurance, you could argue, hit an all-time low in February of 2020. It took a global pandemic to get that shifted back in the right direction. And if you asked consumers today if they were more or less aware of life insurance than they were a year ago, I think you'd find most people agreeing that they're more aware of it. So I do think on the life insurance side, it's unfortunate that that's why it's more relevant, certainly today than a year ago. But what a tremendous opportunity for us to, again, work with advisors and really start talking to them about the blocking and tackling and the benefits of talking to your clients, not only about term insurance, not only about whole life, but really all forms of life insurance. And, they've gotten away from it, and it's on us to get them back focused on it more often than not. And I think the momentum is in our favor now. Product challenges for sure, but relatively speaking, our products are as competitive as they've ever been. So I'm really bullish, as I said earlier, and I think companies like Jim's have led the way in educating producers, and I think as an industry in terms of distribution, we have a tremendous opportunity in front of us. So I'm really excited about it.
Thank you. Well, out of respect for everyone's time, we will wrap up the panel. But before we close, on behalf of Sagicor, on behalf of NAILBA, Eric, Jim, Jason, thank you.
Thank you.
I think we've all learned a tremendous amount from your vast expertise, and thank you. I will say a special thank you for me for your friendship. And for everything you do to support this industry. So for all of our NAILBA friends and members out there, when in doubt, think AIG Advisors Excel and Broker Service Marketing Group, and maybe Sagicor too, if you're feeling it. But thank you again for your time today and for all your support, and thank you to NAILBA.